Good morning, everybody. This is Jack Gleason with Startuptrading.com. It is 9 o'clock in the morning, New York time on September 11th, 2020. I do want to just start off with this video here today, just talking about rollovers. So for those of you guys who don't know or maybe are a little newer to this, 4 times a year there's an event called rollover, which basically takes us from the expiring contract for the futures market into the I guess the more active one. So this happens in September. We roll from the September to the December contract. In December, we roll into the March contract of the following year, which is the first contract of the year. So in 2020, the March contract will start trading in 2020. In 2021, the March contract will start trading in 2020 of December. You go March rolls over in June, and then June rolls over in September. So this happens 4 times a year. And when this event happens, there is a price discrepancy, or there's a difference in price on the chart. And this goes for any futures markets. Now, the indexes roll over at different times than gold or oil will, or other commodities. They all have different roll schedules. And this is, I think, what confuses most people about futures trading in general, because they really just don't understand it. So what I have here is a roll date calendar. And this is, for the years 2020 and 2021. This is the CME Group Equity Index Roll Date Calendar. And I'll probably put this in the Startup Trading chat room. But you can see we are in the 9th month of the year, September. The expiration of the September contract is actually not till next week. And that's going to be the 3rd Friday of the month. So you can continue to actually trade the September contract up until the 18th. However, what happens today is volume shifts from the September contract into the December contract. So we shift from the September into the December contract, and that gives us our roll date of 9/10. And then this will happen again on the 10th of December, and then the 11th of March. So I'll keep this in the calendar on the website. Let's quickly go over the news events here for the day. There's really not much for major news events. They've already occurred overnight. At 8:30 this morning, we had CPI numbers. There's going to be the federal budget balance. So almost like nothing for news. Let's take a look at the indexes just to kick it off. Now, I'm looking at daily charts. These are all daily charts. What you'll see here on my Thinkorswim chart is this green dashed line where we roll from what is the art. So it's RTY U20, which is the Russell. U is the September contract, and then 20 is the year. So now we're going RTY Z20. What happens is the RTY U20 data, so if I go in here, RTY is a continuous contract. So up until the green line on the left-hand side of the chart, we have the price data for September, and then everything past yesterday's 6 o'clock open New York, we're going to have the data for the December contract. Now, this is what creates the price gap, because there's two different prices for the futures markets. I'm going to type in at the top left of my screen, and this is just a little bit of a lesson as it is a trade plan, RTY U20. Now, you will have to go in and through every one of your charts if you want to chart only on the September contract. Now, RTY U20 currently has a price of 1514.7, but if we go to the continuous contract, which is currently the December, the price is 1511. So roughly about 3.5 point difference on the Russell. And that's what creates the difference in the chart. Therefore, this is like one of my least favorite days to trade, because and Perry went over this a little bit in the morning trade plan, but you basically have to, redraw all of your charts because there's two different price datas that you're getting. So I typically just, observe a day like today, but I will go over the continuous contract analysis, and I just wanted to kind of explain how all of this works. Now, for the continuous contract in the Russell, we had a full 50% retracement short from what is the highs of August 11th trade to the low. So August 11th to September 9th traded a 50% retracement. So we spent, basically a month going lower. we run into a 50% retracement and there's an immediate reaction of sellers. This was also a previous swing low. Now, this would target down into 1450 area, 1450. That would be the negative 23% profit target of this level. We have, excuse me, we have traded that resistance level yesterday, and then we actually immediately had a 50% retracement short that completed its target, and the next traditional measured move here from 1532.7 to low has traded in the overnight session. Now, there is the possible variation if we trade the full halfway back short. That's at 1524.4. That is a valid resistance level, but based on where we reacted, it is a next measured move with a downside target of 1497.9 here for the Russell. Downside target of 1497.9 for the Russell. Moving on to the S&P, just a little quick review. We'll back out to the daily chart. Once again, we have the ESU20, which is a September contract, rolling into the ESZ20. ESZ20 is the new price data. And I don't actually, so the ESZ20 is 33.45. Let me look at what the ESU20 is. 33.45. All right, 33.56. So it's about roughly an 11-point difference between the two contracts. And there's an 11-point difference between the two contracts. Now, our highs, and we'll go out to the daily, often there is big moves around futures rollover. I mean, literally look back. This is the rollover here earlier this year, the March roll. That was insane volatility. We had a 331 point range going into the March rollover of 2020. And then the following day, once we rolled over into what was the June contract at the time, 317 points. Absurd. The last contract roll, what did we do? We sold right off. We sold aggressively off 192 point day into the sell-off of what was his September contract. And really going into this contract, we've had a pretty aggressive move. Now, it started a little earlier. You can see this move down started, the first red bar was, 3 days before that rollover. And then this one, the first red bar was 5 days before. Now, what's interesting is we have this extension here in the S&P 500 from 2635.75 to high. Now, this traded right after the futures market rolled over from March to September. That same anchor new high could possibly trade maybe today, maybe next week. But let's look at the two support levels that this would give us. One is the 38% retracement, and the other is the 50% retracement. Those are really the only two levels I look at when it comes to an extension. Now, our 38% retracement is going to line up with a previous daily swing high. And I mark up previous daily swing highs with orange dotted lines. So I'll go in here, I'll change the color to orange, make it dotted. So anytime you see an orange dotted line, it's a previous daily swing high. Now, we also have multiple daily swing marks at this level. We have, leg starts. These are the startup trading indicators. We have one from July 29th. We have another one from July 17th. We have another one to the downside from June 9th. So that's 1, 2, 3, all within the same range of this previous high in the same anchor new low. Now, does this come out and play out? No, we have no idea if this is going to be a low or not, but it is absolutely a level of interest as we get down here. Everything from 32.30 to like a 32.15. So it's 15-point range, which isn't that big of a range. Now, our downside target, based on where futures have sold off, and which is an extension that began at 35.51 quarter, which we've been holding once to target. We've held it twice to target, and this is the same anchor to low. We have valid downside targets here at 32.35. This is there's nothing bullish about this price action. Coming out of the highs yesterday, we confirmed that resistance level by failing to hold the halfway back long for the day. This halfway back long was a valid setup. It broke. we immediately moved into a 50% retracement short, and then into the close we actually had an extension trade once to target, and then there was the same anchor new low which broke in the overnight session, and all we did was rotate up to the previous traditional. And that traditional has been front run here. So 33.67 quarter is our resistance level that I'm watching for here today. And if we do make a new low without trading that, I would imagine that we actually go back into the old extension. And I'll talk about that when that happens. But this is why you get this, these front runs, because you do have different price data. Now, if I look at the ESZ20, because this is a continuous. So if I go ESZ20 here, and this is why markets like this during rollover are a little more difficult, and you look at that next traditional, guess what? It traded its 50, right? Let me see what the full halfway back did. Yep, we actually traded the full halfway back here on the ESZ20. So what the chart says on the continuous can be completely different than the chart on the December contract. So the high of the December contract yesterday was 34.14.5. So if I go to the ES continuous contract, 34.14.5, that's what I would do. I would draw 34.14.5, and it looks like I'm going to draw out of the air 34.14.5. Here we are. It's like right. I'll edit it. 34.14.5 to, oops, I forgot what the low was. I gotta go back and look. Yes, Z20. 34.14.5 to 33.16 quarter. 34.14.5 to 33.16 quarter. Okay, I'm just gonna type that in. 33.16 quarter. 34. All right, so that is actually what the draw looks like. Okay, for the new contract, and our downside target takes us right into the low of the Wednesday night gap down on the AstraZeneca news. All right, moving on here to the Dow. Now, the Dow's extension that traded right after the last rollover into the September contract completed its profit target last week. That is when the market turned on this target completion. That same anchor new high, the 50% retracement, ooh boy, would that be nice if we touch this, 25,293. I would literally set a blind limit order at this level for the next 3 months in the election or whatever event takes us down here. We have a leg start, previous lows, general consolidation, same anchor new high, 50% retracement, 25,293. Would be a very fantastic level for the YM to trade. Now, we held or have held the full 50% retracement short in the YM. That is from Thursday's high, September 3rd, to the low of Wednesday. It traded its halfway back Wednesday. An incredible short covering rally. And we have just been absolutely whacked off of this. But once again, to get the current draw, you have to go to the YM Z20, and this is just like a full-on lesson here. The YM Z20 will do, what is the halfway back from the prior day high to low? The YM Z20 has a prior high of 28,033 and a low of 27,313. 28,033. Help me remember these numbers. 28,033 and 27,313. So I'm just going to go in here at 27,313. Did I say it? 83? I forgot. 833. I think this is... I don't remember. I have to write that one down. That's a lot of numbers. Let's see. 28,044. 28,030. 28,030 to 27,313. I'm going to write this down real quick. Sorry, this is a very long, might be boring, but I just want to teach you guys this, because this is really how to properly do it. So you literally have to go to the December contract, then change your chart. And this is why I just don't trade rollover. Because I'm like, I don't want to do all this. I'll just take Friday off. Then go back to the continuous contract, and that's how you keep it on the right chart. So we'll go here. It's 28,033, and the low is correct. All right, cool. I nailed the low, missed the high. So that is the actual draw here, which gives us a resistance level today at 27,673. 27,673 is your halfway back for the YM. And then we got one more to do, the NQ, which is actually interesting because the NQ looks like it's reacted to the entire continuous draw. That's also a previous daily swing mark low, or I'm sorry, leg start, this 11,327. But I'm just going to leave this like this. You guys know how to do that by now. Just go to the NQZ20. NQZ20. Z20. You have to look up what is the high of the day and the low. Okay, so we have the high is 11,533 half, and the low is 11,075.75. Then we go back to the continuous, and we edit the draw. We got to go 11,533 half, and then on the low we go 11,075.75, and that is your draw, ladies and gentlemen. So our resistance level is then 11,304 half. 11,304 half. All right? That takes care of those indexes. Got all those levels. I'll share those to you guys in the trade room. Moving on to something a little more simple, oil, which hasn't rolled over. Oil has an extension short drawn from Thursday of last week's low at 40.22 to low. Now, we continue to see selling pressure, and I would love to see a full halfway back short, which lines up with the current prior high of the day, or the current high of the day, 37.56. I have a support level down here, like 36.42, just the bottom of the range, but 37.56. USD JPY, this chart, this is a daily chart. I'm looking at 106.37 on the high, or 105.87 on the low. It's pretty brutal. Not much going on. Aussie dollar did retest the full 50% retracement short. 73.02 range to 73.27. So the next thing I'll look for is this bottom of the range, this old halfway back. 72.37. Euro. These are just, you can see they're just ranging. They're ranging. I want to watch what the 78% retracement of this is. Possibly get a fade there. That would be a 119.55. Yesterday, I was looking for this full halfway back long. Now, we literally went, this is why we build a wedge. We break the 61 of the short. We break the 61 of the long. We retest the long this morning. We're probably going to retest the short. But we have opposing 61 breaks. That's more of a range. Right now, the USD or GBP USD is an extension short with a downside target of a 127.47. We are bearish below a 128.68. Bearish below 128.68. The USD Cad came off a 50% retracement long from the low of last week on Tuesday to high. That was a 131.27. Since coming off of that, there was this next measured move. That is what we're currently in. Its upside target is a 132.21. And then moving on to gold, which is getting its breakout here, we came down into, now gold was yesterday, we had this very technical move. It was, just a halfway back long. Yesterday's video was titled Beginning of a Move. Well, that's exactly what happened. We blew through targets. We began extensions that had very technical hold, but then they just broke into the end of the day. What did we come down into? We came down into the full 50% retracement long from the lows of the week to high, which also lines up with, if you look at the hourly chart, there's this wedge forming, okay? This is a breakout pattern, but it hasn't resolved yet. So we're probably going to go back to, maybe complete this, top of the range here, probably get some resistance around that 1933, and then pull back one more time and slingshot higher. But yeah, so we've come off that, and we've held the first long setup. We had this hourly leg start, first traditional. Once that completes, ooh, looks like it has completed. Looks like it just completed. The low of the overnight session high is just completed, so we are going to have a next measured move here. Valid long setup, 1954.7. And then silver, also, obviously trades along very closely with gold. We have this full 50% retracement long that just traded right at the close, a little bit of a dip here, and then once again, first traditional auto lows. I'm just going to continue to pull the halfway back long from that low in silver. But, there very well could be a series that begins here. But I'm going to be a little more conservative with the 26.94.3 50% retracement. I know that's a pretty long-winded morning trade plan because we had spent a lot of detail going over those indexes, but hopefully you guys learned something about futures rollover and how to chart on it. If you found this video useful, please give this video a thumbs up. Feel free to share it with anybody who you might think could benefit from it. I will be in the trade room here this morning, not this afternoon. Everybody, trade safe. Have a wonderful day. Enjoy your weekend. And I'll see the members of the startup trading community in the startup trading chat room. Take care. I will be in the trade room here this morning, not this afternoon. Everybody, trade safe. Have a wonderful day. Enjoy your weekend. And we'll see the members of the startup trading community in the startup trading chat room. Take care.